Hello and welcome to Do.Natien Investment. This analysis is for Constellation Software as of 13th of August 2026 with a share price of 3,079 Canadian dollars. The full report is on Do.Natien.ca. Trailing PRE is 48.8 times against a 25.3 times warranted multiple, and organic growth just fell to 3%, 1% after currency. 9 days ago, we rated Constellation a buy. Today, it is a hold on all three horizons, and there are two reasons. The first is the Q2 result on the 11th of August. Revenue grew 17%, but organic growth, the part that is not bought, was just 3% and only 1% after currency. Management pointed to Altera, dark matter, recent Lumine deals, and a large customer lost in South America. The second reason is ours. We made a valuation error in the last report. We caught it in audit, and correcting it is what moved the signal. Constellation trades in Canadian dollars and reports in US dollars, so we assumed the data provider had mixed the two, and we restated its price-to-earnings ratio from 48.8 down to 35. That was backwards. The provider's earnings figure was already converted. The 4 reported quarters summed to $45.33 US, which at 1.39 is 63 Canadian dollars, exactly what it showed. So 48.8 was right, and our fix is what introduced the error. At that level, the stock breaches the 33 times line we treat as rich for software, the valuation ceiling gate fires, and every horizon caps at hold. We are telling you this because the correction is the reason the signal changed. The headline said profit rose 386%. Constellation's own release says that excluding currency and a liability revaluation, the increase was 8%, so almost all of it was non-operating. Strip that out and the multiple is not 49 times, it is closer to 63, which is nearly 2.5 times what the arithmetic warrants. That clears the threshold for a do not buy. It does not fire, but only because the rule carves out companies with exceptional, proven, durable growth, and Constellation has that on total growth. Read it on organic growth instead, and you would reach do not buy rather than hold. We think hold is right. You are entitled to disagree, and we would rather show you the join than hide it. The strongest argument against this call is that we may be using the wrong lens. On enterprise value to earnings before interest, tax, depreciation, and amortization, Constellation trades at 17.3 times, below the software median. Its free cash flow yield is 5.6%. Most of the street values it that way and reaches a buy. If organic growth recovers above 5% for 2 quarters, we would be wrong and the case reopens. Now weigh the risk against the reward. The bull case is roughly 36% above today, the base case the most likely, about 10%, and the bear case a fall of about 22%, so you are risking about 22 to make 36. So our call on Constellation Software, downgraded to hold on all three horizons. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Do.Natien Investment at do.natien.ca. The link to the full report is in the notes below. Have a great day.